All right, YouTube. I'm about to do a weekly analysis on Nasdaq real quick. We're at the top of the week. Market just opened up, so I have to go over price action and see what I see for potential price action for the week ahead. All right, been bullish for the most part. We just made this nice little run, and from here to here, this area right here is considered premium. This is premium. This is discount. So right now, being in premium, seeing that the bodies haven't been able to close outside of the premium, there's a big wick above the premium that's giving me indication that the market want to come down to probably grab some sell side liquidity and also fill in a couple of liquidity voids and fair value gaps before continuing up if it's going to continue up after this, which most likely it will. So we already got the weekly marked up, so we'll drop down to the 4 hour. All right, so here I already got it marked up. Let me just talk about what it is that I marked and why I marked it. All right, so this big candle down is a large displacement candle to the downside, breaking a recent low. So this right here is an indication that this is the direction the market want to continue. So seeing this mark up the break of market structure or shift in market structure, and right now this right here is a big 4 hour fair value gap, but I refined it some and marked it up on a 1 hour chart. And as you can see, price came back up and tapped the 50% of that fair value gap. And that's the reason why I have this entry right at that stop loss right above the high that left the fair value gap. So what I would expect from here, price can potentially come up and clear this high because this was a high that was left on Friday. So I'm expecting lower prices, then I would expect the market to come and clear the liquidity above here and also continue to fill in most of this gap here because it only filled in the bottom half of it, and then it created this high, and then it came down, tapped this fair value gap right here. In fact, let me mark it up, make it easier, get this stuff out the way. All right. So now this right here is an hour fair value gap. And look how price came down into that. And it left some relatively good lows right here. So I actually wouldn't be surprised if price didn't come down, cleared that out, ran up, cleared out, let me get that out the way, cleared out this liquidity, filled in some more of this gap, and then continued to run down. So we're gonna watch this and see what the London session do and Asia. And if this is cleared, after these are cleared, I'll go ahead and enter a short for Monday New York session AM. I'll go ahead and enter a short. Um, Even if this is cleared before this is cleared, I'll still enter a short, and this right here would be my target. I would target this, and I would expect it to come back up to fill in more of this gap before making a bigger move down to clear out these lows. So I'm gonna mark it up just to so you can visualize what I'm visualizing. Where's the arrow? This one. All right. So we're here. Price can do one or two things from here. From here, clear that liquidity. Grab that liquidity. Come back up. Fill that box in. I mean the fair value gap. And done. You can go that route, or it can come in and oh man, hold on. All this stuff in the way. Or the price can come up here, clear the liquidity above this one, tap into this fair value gap zone, come down, grab this liquidity, fill in this gap zone, and then continue this move, but minus this one. It'll come down here first. It'll come down here. You know what? Let me make these a different color. Let's do a green. All right, this is scenario number 2. Here. All right, that's what I'm expecting with price from this point on. One or the other. And with a large down move coming in, I wouldn't be surprised if a wick wouldn't wick above here, but the body close within here somewhere before running down. Because there's a lot of liquidity up here from all the people that's profitable in this short. Their stop loss is going to be up here. So I wouldn't be surprised if price didn't run up there, but it's more likely to just fill in this gap and then go ahead and seek lower prices. Going back to the higher time frame, we can see how much liquidity is on the downside. We have this previous day low. We have a fair value gap here. We have another one here. And then we have all this sell side liquidity with another gap here, little baby order block, more fair value gaps. So there's a lot to the downside that it can grab. These right here would be considered relatively belows. So let's see what Monday give us. Let's see which one of these play out. The blue or the green. I got my money on the blue. And it's my analysis for the week. Let's see what happens. Or I could be completely wrong. The price can just continue its bullish trend. And if that happens, I'll just wait for a nice little pullback into a fair value gap or a bullish order block, execute from there, and get my little kilos and bits and get out the way. And that's it. That's all I got. Let's see what happened overnight, and it'll determine if I take a trade in the morning. All right, peace.